Yo, what up guys? Welcome to a new video. This one I'm gonna give you guys a quick trade recap on the two trades I've taken. Well, it's not two trades, it's kind of like three trades, but my most recent trades I've taken trading the futures market, especially kind of like scalping the futures market. And as you guys know and are aware of, I'm a swing trader. I've been trading the forex market for since I have memory of, like, this last 4 years. And I kind of like decided to start a new challenge on my Instagram, especially, and of course I'm gonna document everything on YouTube, where I'll kind of be trading the futures market until I'm able to get $10,000 in payouts from prop firms and from valuations like Apex, Fixed Fee, and the other ones that are out there. So in this one, I'm gonna just show you guys the trades. As you guys can see, I've currently have two trading days. The first one I made this and this. So we're currently up $550 on this evaluation, and the target is 53,000. And by the way, this is just one evaluation. I'm planning to get more, of course, to kind of like use the advantage of getting a lot of accounts, just copy trading every single one of my trades, and hopefully pass a lot of accounts until I'm able to get that $10,000 in profit that I'm looking for. So if I just jump into my trading journal real quick, as you guys can see, these are the three trades I've taken. The first one here and two on the other day. So this one was on Friday and this one was on Thursday. And as you guys can see, some partials, break even, and everything super clear, super transparent with a couple of notes. So yeah, also some of you guys were asking if this also works, like this trading journal works for other methodologies aside from swing trader. And yes, 100%. You just can create another column and add, for example, trade image for hours, 50 minutes, and 1 minute to just evaluate different time frames if you're looking for that, and multi-time frame analysis. And that's what I'm kind of doing right now. So now let's just jump to the first trade that happened on, as you guys can see here, it happened on July 24th of 2025. So this past Thursday. And yeah, so basically, I want to kind of like explain, I'm not an expert in trading this system, but I come from swing trading. So I kind of like the methodology I've been testing, I've been using for a while. And of course, I've been gathering some data while back testing and forward testing is based on super simple analysis, starting at the 4 hour, also like daily 4 hour, and then I just jump immediately to the 15 minute and take my entries in the 1 minute. So I want to kind of like show you guys how I analyze my charts whenever I start trading at exactly 9:30 a.m. in the morning New York time, and kind of like my process towards taking trades. As you guys know, also I prioritize simplicity and mechanical approach to the market. So this is, in my opinion, the most simple and mechanical way to approach slower time frames, especially trading in this case NQ, which is the asset I'm trading right now. So first of all, this is the daily, so this is Thursday, right, as you guys can see. And what I saw immediately is we were completely bullish for the day. So I immediately did this. Price recently rejected to this fair value gap in the daily, of course, breaking, kind of like trying to break structure, but still we have some equal highs at the top. And also, if we can see, we took yesterday's high in this case. So if we can see here, we took yesterday's high. So if I mark this up, we took yesterday's high, so I immediately moved to the 4 hour. We took yesterday's high, but as you guys can see, the break and kind of like the liquidity sweep, it's not that strong, indicating that this, in my opinion, is just a sign of important liquidity, or also some possible target we can aim for, considering that, of course, we're completely bullish. Also, we can understand the 4 hour that we just respected this fair value gap, and also we left this huge fair value gap in the 4 hour that we could look for some kind of reaction to target this equal highs and keep going up, of course, considering that we're bullish. Also important to mention, I don't have strict biases when I start trading. I trade based on what the market is telling me and where my kind of entry roles are met. But in this case, of course, we were bullish. So initially I was waiting for a price to give me some kind of reaction to the upside so that I can take or could have take a trade. So in the 4 hour, there's not too much. This fair value gap, or also this demand zone that I was also interested in, maybe price kind of like getting there and give me some kind of reaction. Immediately we jump into the 15 minute. In the 15 minute, what I do is, let me actually remove this real quick so that there's not too much kind of like information. So considering that we are projecting right now to a 4-hour fair value gap to the upside, in the 15-minute, what I immediately do is I just mark up my kind of like targets, or kind of like my important zones of targeting my trades, or where price could reject for. Like I said, I'm not an expert here. If you guys have some advice, let me know, but this at least is what I've been testing, and it works amazing for me. So what I do immediately is just mark my kind of like highs and lows from the sessions. So in this case, I mark 6 hour. So in this case, so I go here. So 6 in the morning, then midnight, and then 18. So that will be Asian. This will be Asian session. This will be London session. So in this case, well, we could see that London has been taken out in this case. So this was the London high. It was taken out. We also see that the Asian low was also taken out, but we still have the Asian high, which is this one. So I immediately go and mark this up. So Asian high, right? So that's the Asian high. We can also remove this, which is kind of like the previous day high. So we already understand that price took yesterday's high. So that's why we're seeing some move to the downside in this case. But we can immediately mark up Asian high in this case, and then we can just mark, in this case, London low. That recently has been taken out. So we can just mark it like this. Price did a liquidity sweep in here, taking, of course, London low. And we can just, of course, mark that up so that we can understand. So if I was looking, as I told you guys, I was looking for some rejection from that fair value gap. The rejection already happened. So we could be expecting for price already to move and take this new liquidity zone, or I think in ICT concepts, this is called liquidity pool or something like that. Like I said, I have never studied ICT concepts or anything. I'm just trading based on kind of like what I've seen out there, tested before, and of course, including some concepts that I know and I used when I trade the 4-hour time frame trading forex pairs. So in this case, we took London low, right? So now what I do is I never trade before 9:30. I just wait for 9:30 candle to develop. So in this case, I just go immediately to the 1 minute. So like I said, what I was looking here, I was seeing if there was some kind of important entry point for me to target Asian highs, considering that in this case, I was looking for price to take this. I also was kind of like waiting to see if price could have go to, like I said, the 4-hour demand zone, so go a little bit lower and maybe look for some sales, or if it could actually retest or take liquidity from this low, right, and give me my confirmation after the 9:30 open, so that I could target Asian high. Like I said, I'm just waiting to see what price in the market gives me. So in this case, I don't have any opportunity for me to kind of like enter the trade. 9:30 already happened. It happened around this area. Let me actually move back to 9:30. So this is 9:30. There you go. So as you guys can see, we took London low in this case. We had a nice opportunity with this kind of like inverse fair value gap created. Price started to go up, but like I said, I don't trade after 9:30. So this was 9:30, and at this point, I don't have any entry kind of like opportunities. I just need to wait to see what price does. And especially in my testing, I just prefer to wait after 10 a.m. to take my trades when it's kind of like the market already took some liquidity or some stop losses, and then gives you kind of like the clear direction. So at this point, I'm just waiting. 9:30 opens. Like I said, Asian high has not been taken yet. And also, like I said, we still have some opportunity for price to go a little bit lower, take liquidity from here, respect again the fair value gap, or even go a little bit lower, give me some sell opportunity so that I can target that demand zone in the 4-hour. So we're just looking here. No entry for me at all. I'm still looking here. Also, there's no entry for me in this case, right? Nothing here. I'll explain how I actually decide to take entries. So in this case, I say, okay, price already moved to the upside. Maybe there's no opportunities for me, and I can just wait for price to reach the Asian high. And then if I see my entry roll, then target a little bit lower, right? So enter in shorts. But I just kind of wait. There's nothing for me to enter here, right? So I'm just still waiting. So here you go. I start seeing some break structures. So I say, okay, now I, like, price haven't taken this Asian high. So what I could be looking for, what I initially said, okay, price took liquidity from here. Price still like around the 4-hour fair value gap, as I said, and price could even go lower to kind of like the demand zone in the 4-hour. So what I'm now waiting for is to see my entry row to go to my actual side of the market to kind of like take Asian high, which was kind of like my main idea for the session, of course. Like I said, I just wait for price to give me the entry. So in this case, I just wait here, and here's where kind of like my entry or my opportunity for entry happens. So I entered the markets based on fair value gaps being disrespected, and in other words, I think it's called inverse fair value gaps. So in this case, I had this first inverse fair value gap. So what I basically enter is in here. When the fair value gap is disrespected, I enter immediately at this point. I usually place or market entries or buy stops in this case, and I will be targeting the Asian high for a risk reward of around 1 to 3 risk reward, right? I place my stop loss sometimes below the candle, not the candle wick, but in this case I placed it in the candle wick, like at the bottom of this kind of range. And like I said, targeting this. Oof, my computer started lagging. Sorry, my computer started lagging, so I'm just gonna give a second so that it kind of refreshed a little bit. Okay, now it's, I think, good, so we can continue. So I just kind of like waited for price to disrespect this fair value gap to enter in longs. So now what I just do is wait. We start seeing there, price starts reversing back, and then it gives me the entry in this specific point. So now I'm in the trade. I'm just targeting, like I said, this one, but my first kind of like zone where I'll be moving my stop loss to break even was this high here, right? So I just move forward, start moving forward, right? This case. And around this area is where I make a mistake. I started seeing price respecting this supply zone, and after seeing some kind of like displacement to the downside, some move to the downside, I get afraid, and with complete honest with you guys, I decide to exit the trade for around a 1-on-1 profit. So if I kind of like move this around 1-to-1 profit, a little bit less than 1-to-1. And first of all, that was not my main idea. My main idea, and based on my testing, I hold trades and I just wait for price to reach this point, move my stop loss to break even, and let my trade run, trailing my stops to kind of like the most recent low that took liquidity. That's kind of like the way I trade. Of course, I'm trading right now, so you guys can see Apex. So of course they have some trading drawdown. That's why I trail my stops. If I was trading my personal capital, I wouldn't trail stops until kind of like price reach my point or not. But in this case, I exited the trade way earlier than I should, and that's kind of like what happened overall. So I kind of like close the entry here and look at what happened after all. Price consolidated a little bit more, and that's where I would have moved my stop loss to break even. And look at what happened after a while. It took some time, of course, but you guys can see it took some time. And this is kind of like what happened if we move price forward. Boom, it reached my final take profit at this point here. You see? So it was a nice entry, of course, but overall, I only made 1-to-1 risk reward on this trade. And yeah, of course, that's kind of like lessons for me. That's something that I need to keep improving on, kind of like managing my trades. Like I said, I'm used to trading the 4-hour just with pending orders. I set my pending orders. I move my stop loss to break even when price reach my 1-on-1, and I just forget about my trades, right? Just kind of like trade 4 hour. You guys kind of understand each candle is 4 hours, so I'm kind of used to this, and that's kind of like why it's so interesting for me to go to lower time frames, document the process, because of course I want to start diversifying, start learning some new strategies that of course hopefully it's going to make me more money, aside of course from the swing trading system. So this was the first trade, and I'm now going to show you guys, I'm going to also show you kind of like for you guys to see the screenshot of the trade I took, so you guys can see it's the same thing. Everything was marked up as I said. My first TP, or the place where I was going to move, the supposed to break even, was here. So it's everything that I just showed you. Also, there was liquidity here. This is kind of like the image or how my charts looked at the exact moment where I took the trade. And as I said, this was my main target for the day, Asia high, right? So this was the first trade, and now let me just show you the two other trades I took that day, the next day specifically. Okay, now if we jump into the two other trades I took, so this is kind of like how the market was looking on Friday and in the morning. As you guys can see, the market looks super similar. We're still respecting this fair value gap in the 4 hour. There's no such thing as a strong break of structure to the upside that kind of like indicates super clear that we're gonna keep being bullish, and we already took this high right now. So we kind of like took this high here. That gives us clarity or also some kind of opportunity for us to look for shorts. But still, if we look, we're completely bearish, so price could easily still keep going up. That was kind of like my reasoning behind what I was seeing in higher time frames. Then, as I said, I immediately start in higher time frames, and I kind of like analyze the markets the same way I analyze my markets on the 4 hour when I'm trading forex. So then we just jump into the 15-minute real quick. I mark everything again. So I mark, just so that I can kind of like see this and show you. So I immediately mark up my kind of like fair value gap in the 4 hour. Then I just jump into the 15-minute, and I immediately mark my zones real quick. So 6. You guys can see that is the same process, and I do it super mechanical because I prioritize like kind of trading in a mechanical way instead of super discretionary. So these are my zones. We can immediately see that we haven't taken Asian high in this case. So Asian high, we still haven't taken Asian high, right? The low, we already took the low of Asian session. Then we also have not taken the London high in this case. So this is the London high right here. So London high, London, right? So we still have Asian high not taken yet, London high not taken yet, and look at this, we recently took London low in this case. We also took, like I said, Asian low. So we just recently took London low in this specific case, right? So liquidity sweep, we just swept London low. So London low. So now, if, as I said, we're still in the fair value gap in the 4 hour, we're still rejecting that fair value gap, and we haven't kind of like had a strong break of structure to the upside, and we still have some kind of like targets, or like I said, I still don't know what's kind of like the term, but the way I see it, we still have two possible areas where we could target our trade, which is London high and Asian high, where a lot of liquidity remains on the top. In this case, we could target these two specific zones and then maybe look for some shorts, right? And more in this case, biased towards buying opportunities than selling opportunities. So what happens here at this point is 9:30. So now I immediately go to the 1 minute time frame. This is 9:44. So this was actually 9:30 around this area. So let me just go back in time, 9:30, right? So we had already took this. There was no kind of like strong break of structure to the upside, but as I said, I don't trade after 9:30 a.m. So right now at this point, I'm sitting at my desk seeing what happens after market open. So we have the market open here. This is the market open that kind of like sweeps London low again, still giving us some sign of rejection to that zone towards the bullish opportunity. So towards I forgot the word, towards the upside. There you go. and I'm just in this point waiting to see what happens. So we can still move forward and look at this. We see both manipulations, so manipulations to the downside, manipulations to the upside, which is something super normal at market open, New York open. And then this is where my first entry kind of like opportunity happens. So we have this fair value gap in the 1 hour. As you guys can see, I entered based on inverse fair value gaps. So my ideal position was here, and I was gonna take a trade in this point. But guess what? I didn't. I was kind of like not sure about the trade, like doubting the system. And I just said, okay, you know what? Let's just wait to see what happens after all. But as I said, my main target was, first target was London, then second target was Asian high, right? This was kind of like how I had my position at the moment. So look at what happened. Just move price forward, and then the entry happens and price starts immediately moving to the upside, right? So here's what happens. This point, I'm bullish, so I'm just looking for buys at this point and looking for price to take London high and Asian high. So my entry already happened, so I was kind of like, okay, I fucked up. I should have taken my ideal trade, which is the one I've tested multiple times. So now market is giving me another opportunity, like to enter this position and this bias and this kind of like setup opportunity, right? Which is the breaker. So I have kind of like two opportunities to enter. I enter our fair value gaps, inverse fair value gaps, sorry, which is kind of like my first entry, and then just look for price to kind of like reverse to the breakers, which is in this case this one right here, where price initially breaks structure to the opposite side. I kind of like decided to place my entry at this point, right, and place my position around this area right here. And same thing, targeting Asian high and London high. But look at what happened. This point. Wait, I think, oh, sorry, I actually entered in this point right here, which was the breaker in, yeah, that was the breaker at the 5 minute, my bad. So I entered at this point right here, this point, which is this breaker actually. Let me actually open this because I want to be super transparent with you guys. So yes, exactly, I entered that first one, so like the overall breaker in the 5 minute. So if we go back again, you guys know that I show you guys everything with full transparency as always. So we were here, so I understand that I have the breaker in this and the breaker in this. So I decided to enter and put my kind of like order at this point with the stop loss around this area, if I'm not wrong. Or even actually, if I'm not wrong, I think I placed it in here because of course I took this breaker. So my stop loss was a little bit higher considering that I took a higher breaker. So that's kind of like where my entry was. I just waited for price to reverse. My order was tagged. And then I was just waiting for price to hit London high and then Asian high. So now that I'm in the trade, I'm just waiting to see what happens. Price immediately go kind of like in my favor, then goes back. And this is kind of like when price started to consolidate. This is kind of like when I decided to exit the trade. So I decided to exit like in around less than a 1-on-1, actually super close to this point. So I exited my first trade in here. Again, not letting my edge and my overall position play out. I kind of like jump into taking some profit and I was still afraid. And that's kind of like my mistake. So I closed the trade earlier. And then let's see the other trade because I remember. So yeah, so what happens here? Price. So I decided just to close. Then I just keep waiting to see what happens. Still my bias is to here, but I started to see this. Started to see that price took London high, and immediately my mind said, okay, we already took London high. Then we can actually look for a selling opportunity, right? And what was my selling opportunity? I was still super bullish for the day in this case, but like I said, I trade what I see based on what price is telling me. But considering that we were still in a bullish opportunity, I was saying, okay, we have a lot of lows sitting at this point. We could actually look for some retesting of this area. So if price was maybe gonna retest this area, right, that we can mark it like this, I was saying, okay, we already took London high, we created a fair value gap in this case. If price decides to inverse this fair value gap, I'm entering shorts. So I place my entry here around kind of like this area with my stop loss in here. And I was kind of like looking a super quick scalp for a 1-to-1, super quick. So if you guys can see, and I show you guys can see how my kind of like entry was at this point. So looking what I'm telling you guys, targeting the same kind of like rejection area so that price could still go up. And I entered this point, and when I saw some immediately rejections, price gave me the entry, this point. Price went to my favor, but started rejecting. So at this point, I gave it another time, but when price immediately jumped back again, I was still okay. I feel that I'm entering some trades at this point because I'm kind of like in a FOMO position because I missed out on my first initial position, and also I just closed the trade without any actual reasoning for doing it. So I said, you know what? It's not giving me some good and strong rejection to the downside, and still this is not the best risk reward position. Let me actually take the profit I already took from this small kind of like profit or kind of like break even day. Let me close the trade and just call it a day for me. I closed the trade at this point when price kind of like rejected to the upside, and initially this is what happened. Let me actually move price forward. So let's actually place here. So price kept going up, and look at this. And we still move price forward. Price kind of like ranged a little bit in this area. But then after a while, price finally reached, as you can see, it took some time, but price after a while, it finally reached Asian high, which was kind of like my main target for the day. Same thing that happened the day before on Thursday. It happened the same thing on Friday, and I wasn't able to actually make the profit I was looking initially. If I would have entered my initial position, which was at this point, targeting this, I would have made some nice profit in this trade, which is around 2.75 R in profit. So I missed, of course, in all this thing. I actually initially closed in this point, right? So for a 1-2, it was not even a 1-1, it was way smaller. But yeah, that's kind of like what happened. Always keeping everything full transparent with you guys, but as you guys can see, my ideal or kind of like my bias for the day was good. I actually took some good trades, and also if I would have held my second entry, which was, like I said, at this point here, and I would have decided to hold the trade, it would have been a nice take profit as well for a 2R in profit. So I didn't hold that trade. I closed earlier. I didn't kind of like respect it and believed on my system and my bias, and fortunately I didn't capitalize as much as I could in this trade. And as you guys can see, these were the trades. So the first one, right, you guys can see that I marked my inverse fair value gap and all my highs and lows the same way as I'm doing it right now. And this is the other entry, which was kind of like the short position. So that was the first day and the second day. So I made, of course, a little bit of profit both days, but not the best performance for me 100%. So this is how kind of like we're doing right now. And those were the 3 trades I took last week, and also the first 3 trades of my challenge to get $10,000 in profit from trading or personal capital or Apex and other prop firms out there. I don't know if it's called prop firms in the futures market. I'm not sure. I might be wrong, but yeah, you guys kind of get my point. So those were the 3 trades, guys. And let me know if you're interested in seeing some more trade recaps. I'm actually planning maybe in doing like a trade recap every single day I take a trade, and just posting kind of like every day a YouTube video after I take the trade, and also posting my videos to Instagram as I've been doing last week. So let me know if you're interested in that. And that was all for this one, guys. See you in the next video. Take care.